Disappointing trading session, and the markets only flattered to deceive. When we came into trade today, we were jumping with joy that it's going to be vaccination for all 18 plus age group, that is come May 1st, and we thought that the market as well would be jumping with joy. Jumping with joy they surely were, because when we came into trade, you had the SGX Nifty actually indicating a smart 1% start, and that was a good recovery of about almost 1.5% from the start of trade, given that the SGX Nifty opened with a 0.5% downtick and then finally recovered a good 1% from those lows. We started off positive. We even saw the market scale up all the way to that 14,500 mark, but that enthusiasm soon failed because it was the global market weakness which rubbed off on our market. So take a look at how Japan, for instance, panned out. That lost about almost 2%. Europe, when we were mid-session, saw again deep gashes coming in, and more importantly, you had the Dow futures as well cracking hard in trade by about almost 0.5%, and that weakness rubbed off on us. We even reached that 14,300 mark, so almost a 2% fall coming in from the highs of the day. 14,289 is how we shut shop in today's trading session. The problem about today's trading session was that the fall in the market was largely blue chip led, and these are heavily FII owned stocks which saw selling coming in. Stocks namely like an HDFC Bank, they fell by about 3.5% to about 1.5% odd piece. Now the problem with these two names is also their weightage on the index, which is why they bore heavy on the Nifty today. That aside, you also had weakness coming in on UltraTech Cement, which was down about almost 5%. HCL Technologies, you had a Grasim, Shree Cement, Techem, which was down about almost 2%. Ayesha Motors, which fell about 1.5%. Tata Motors, you had Asian Paints, UPL, ITC. In fact, talking about ITC, the entire FMCG universe as well was under pressure today. So not just ITC, which is a conglomerate, but with part of its business FMCG, but also the likes of Britannia and Unilever as well were some of the key losers today. So again, the same pattern here as well. Largely FII dominated stocks are the ones which held us back in today's trading session. Similar was the case when it came to the broader end of the market as well. What started off looking like it's going to be an across-the-board recovery soon gave up, and you had the declines eventually which took over when it came to the broader markets as well. Having said that, there were still some shining spots in the market. A PVR, which has really been beaten down. As soon as the stock fell below that 1,000 rupee per share mark, you did see buying come in into that stock price. ICICI reacted to its earnings. That was a fire starter from the word go today, although it cooled off from the top of the day, but still held out by about roughly 6% or so on the futures. Cadilla was a big mover today. You had a Jindal Steel as well, which also was a gainer. But again, going forward, much like yesterday, it's the institutional activity which one really needs to map very closely. Are you going to see a very large sell figure from the FIIs? And more importantly, like yesterday, are you going to see DIIs come to the rescue and see some buying coming on the dips from the entire fraternity? That is something that one needs to monitor.